Jerome Powell just left the Fed after 8 years, and oil prices crashed 7% while Bitcoin dropped below $72,000. Tuesday, June 2, 2026. Like and subscribe for daily market updates. Today's agenda: Powell steps down, oil price crash, tech rally in Nvidia, Musk merger rumors, Miami financial hub. Now let's look at how this uncertainty is affecting the price of oil. We start today with a massive shift in Washington. Jerome Powell has officially stepped down as the chair of the Federal Reserve after serving for 8 years. This is a huge moment because the Fed controls the interest rates that affect your mortgage, your credit card bills, and the cost of borrowing money for businesses. The market is currently reacting with uncertainty. The dollar index slipped to 99.17, which means the greenback is getting weaker. When the dollar gets weaker, it usually makes imports more expensive, which can push prices up. Investors are now wondering who will take over and what their plan will be. If the new leadership is in favor of higher rates to fight inflation, that is bad news for stocks. If they are in favor of lower rates, that is good news. Right now, the market is just waiting for the next announcement. This change in leadership creates a fog of uncertainty that can cause prices to swing wildly. You need to be ready for volatility because the rules of the game are changing right now. With energy prices falling, let's see how the tech giants are reacting to the market. Next, we have to talk about the energy markets because they are in a mess. Yesterday, oil prices collapsed by 3% in a single day. That is a massive drop. The price of WTI crude is now sitting at $90.50 per barrel. Why did this happen? It was not because of a shortage of oil. In fact, the opposite happened. There were headlines about a conflict in the Strait of Hormuz, which is a very important waterway for shipping oil. Investors were scared that ships might be blocked. However, the situation did not get worse. The conflict did not escalate into a total blockade. Because the worst-case scenario did not happen, investors felt relieved. This relief caused a sell-off. The market was pricing in a disaster, and when that disaster did not occur, the price fell. This is a classic example of how markets react to expectations rather than just reality. If you own energy stocks, this drop is a huge advantage for your portfolio. If you are worried about inflation, this is good news because cheaper oil usually means lower prices for gas and food at the grocery store. Now let's look at the biggest corporate rumor of the week involving Elon Musk. Despite the drop in oil, the big technology stocks are still driving the market higher. The S&P 500 managed to gain 0.8% on May 31st, and the Nasdaq gained 1.2%. This positive action was led by Nvidia. They launched a new artificial intelligence chip specifically designed for personal computers. This is a big deal because it shows that companies are still spending money on AI even though the growth rate is slowing down. This is called a negative second derivative, which simply means the speed of growth is decreasing. However, the absolute amount of money being spent is still high. This keeps the tech sector strong. The rally in tech stocks outweighed the decline in oil prices. This tells us that investors are still very interested in artificial intelligence. They believe that AI will continue to be the most important technology of our time. However, we must remember that this rally is happening while inflation remains sticky. If inflation stays high, the central bank will be forced to keep interest rates high, which can eventually hurt these expensive stocks. We are seeing a tug-of-war between the excitement for AI and the fear of high interest rates. Finally, let's look at where the money is moving geographically and how it affects crypto. We are now looking at a very interesting story involving Elon Musk. There are strong rumors that he is merging Tesla and SpaceX. This is not just a simple acquisition. It looks like a stock swap where Tesla shareholders would receive shares in SpaceX. The new company would be branded under X Holdings. This would unite all of Musk's major assets, including his robot Optimus and his AI supercomputer Dojo. The market is reacting to this news by buying Tesla stock. Investors are hoping that this consolidation will create a new giant company. This is a speculative move, meaning it is based on rumors and expectations rather than confirmed facts. If the merger happens, it would be a massive event. If it does not happen, the stock could drop. This uncertainty is creating a lot of trading volume. It also shows how much attention the market is paying to Musk's personal decisions. This kind of corporate restructuring can change how we value a company. Instead of looking at Tesla as a car maker, we might start looking at it as a piece of a larger ecosystem. This shift in thinking can cause prices to move in unexpected ways. Now let's wrap up the day and see what you need to watch tomorrow. Our final chapter looks at a major shift in where money is located. The mayor of Miami Beach is claiming that his city is becoming the next major financial hub in the United States. He says that big businesses are fleeing New York and Chicago because of safety concerns. Hedge funds like Citadel are moving their operations to Miami. This is not just about lower taxes. It is about safety and a friendly regulatory environment. The city is lowering property taxes and making it easier to get permits for new businesses. This is creating a new center of finance in the South. This migration of money is very important for digital assets. When hedge funds move to Miami, they bring with them a need for secure storage of digital assets. This creates a favorable environment for crypto adoption. It also suggests that the United States is becoming more decentralized. Money is no longer just in one place. It is spreading out to different cities. This reduces the risk that a problem in one city could take down the whole financial system. For investors, this means that Miami could become a key location for trading and managing digital assets in the future. Today was a day of mixed signals for investors. On one hand, Jerome Powell leaving the Fed created uncertainty, and oil prices crashed because the feared disaster did not happen. On the other hand, tech stocks rallied on AI news, and Miami is attracting big money. The main takeaway is that the market is fragile. High inflation is keeping interest rates high, which is a challenge for stocks. But the migration of capital to Miami and the AI boom offer some advantages. Investors should watch the CPI data next week. If inflation stays high, the Fed will have to raise rates again, which could hurt the market. Be ready for volatility. Thanks for watching Market Pulse Daily.